Welcome traders. My name is Adam Harris, Chief Market Analyst, and so let's have a quick look at the economic calendar. I was going to say that I didn't produce an episode or show last week. It was a long weekend. I took a holiday. I was on a break. I apologize for skipping last week, and of course it was quite an eventful week, wasn't it? So let's just have a look at this upcoming week in terms of economic calendar events. So I'd start off by focusing on Wednesday. We've got out of the US, there's a lot of US dollar news. And I see we've got ADP figures coming out on Wednesday then. But then we start to lean towards Thursday, where we get both ECB interest rate decisions. So I am expecting a market reaction there, at least for the euro, then followed by the initial jobless claims, and then finishing really kind of the big finish at the end of the week, which is non-farm payrolls and of course unemployment figures. Now the US economy is doing incredibly well under the current administration. It's doing the best it's done in 70 years. And so my expectations, for the most part, it should remain stable, but at the same time, it does appear as though the upcoming November elections have started to, the market is starting to potentially start to keep an eye out on that, and is potentially positioning itself in anticipation of that. So let's kind of without further ado, let's go and have a look at the charts. Okay, so looking at the VIX, again, the monthly gives a really good overview of it. We can see that it's just hovering around the lows. Therefore, as far as the market is concerned, it is nice and relatively stable. All right, so not going to overcomplicate it. We'll keep it very simple. Let's kind of move on from there. So the next thing we have here is the dollar index, which is now at the top of the range, still ping-ponging off the top of that. And where we get this conflict is that we have this uptrend on the weekly. We've got a couple of bullish inside candles, struggling to go a little bit higher within an uptrend, but it's leaning bullish. It's looking a little bit weak, actually, the last few weeks, like it's undecided. Then if we have a look at it on the daily, we've come down from a downtrend and we're trying to form an uptrend, high lows, high highs. So there's a bit of a mixed signal over there. And really, I think this week is likely to give us some clarity on that. Okay, so in other words, dollar index not offering much at the moment, but is in the medium term is actually bullish. But on the daily is range bound and is range bound on the monthly. All right, so all of that kind of makes sense within the picture of what we're looking at in terms of I think elections and a whole lot of other stuff going on at the moment. When we have a look at euro dollar here, so euro dollar looks as though it's a little bit of a bull flag at the moment. It's quite strong. The euro in isolation is quite strong. Although we have technically got that downtrend, on the weekly, it does look as though it's trying to stay above that 108.50 level, but is also battling with resistance. And then actually within the range, it's just produced a bullish candle. So basically, euro dollar has no clear direction in the sort of medium and longer term at this point in time. It is range bound, it's stuck in the middle of the range, and it's ping-ponging around, which means that we really have to just give it a bit of time for it to decide what it's going to do. And this could stay this way for the foreseeable future. I'm hoping that this week will kickstart something and that the dollar will decide what it wants to do next. Then we have a look at sterling. Now, relatively speaking, or compared to the euro dollar, sterling is actually looking much stronger. At the moment, it's a nice little double bottom within an uptrend. It's certainly hovering towards the top of its range. It's bumping its head up against the moving average there. So unless the dollar decides to make it start taking action and do something with it, my expectation is that sterling for the time being is expected to continue pushing higher. And that's it really with regards to that. It's been performing quite well recently. You can see here, Aussie dollar against US dollar on the daily has produced the same thing. It's come back, it's bounced, it's produced that double bottom, which is generally speaking a bullish signal. Then you've got the weekly here producing a bit of a bullish indecision candle, but still leaning more to the upside. And you can see as well on the monthly, a swing low and a higher low as well. So Aussie dollar starting to look, although it's in a bigger sort of picture of indecision, is starting to look like it wants to push a bit higher. So that could add towards a weaker US dollar for sure. Kiwi dollar is doing the same thing as well. Look at this very nice bullish, very strong bullish candle on the monthly. Uptrend on the daily, battling with resistance. So what's happening is it's almost as though the US dollar isn't really sure what it wants to do right now, and the other majors are kind of taking advantage of that and just pushing back up against it. Euro sort of independently looking not that weak, the pound looking a bit strong, Aussie looking strong, Kiwi looking strong on their own, actually almost in comparison or irrelevant, or wow, what is wrong with my brain today? Or it just regardless of what the US dollar wants to do. Okay, so dollar yen. Here's what's happening with the dollar yen. Dollar yen, that trend is still intact. It's pulled back. This kind of thing would often be seen as a bullish, as a buy signal, this one as well. So the trend of the overall yen pairs across the board, all of the yen pairs are, that trend is still intact, but the danger hasn't gone away. The Bank of Japan does ultimately want to curb this, and the risk of them intervening and creating volatility within the yen pairs is still there. So traders have a couple of choices. They can continue to trade with the trend, but they need to be either reduce their risk exposure or consciously acknowledge that the risk is there. Make sure they've got their stop losses in place, either reduce their risk or go full risk, or avoid trading it completely. But just be aware that, you know, until that trend is ultimately changed, the BOJ, the Bank of Japan, are determined to change the trend. And if you've been around for more than a couple of decades, you've seen them do it in the past, which means they're not going to quit until they get that change. So be aware of that. That is a higher risk. Dollar Swissy here is range bound at the moment, actually very clear on the weekly there. And so let's see what happens this week. It's at the bottom of the range on the daily, and therefore we could see it bounce to the upside. I'm not going to call it till I see it break out of the range. So for now, I'll just define it as range bound. Dollar CAD also really not, very, very messy when you look at it on its own. Also here on the weekly, you can see very strong selling positions there. Not as strong underneath here and range bound. It's just, and then also range bound on the monthly. So a lot of the majors have been range bound for a while, going back to 2022. So we're gonna have to see what's gonna happen with that. All right, I would say though that the Swissy pairs are looking, I think this week we could see a possible finish to the upside on the Swissy pairs, Aussie Swissy, Pound Swissy. They're all looking potentially bullish, and I think their longer term trends, especially on the weekly, are at a point now where they're coming back to test support and possibly could set up to go long. And some of the CAD pairs, in order of preference, so the yen pair is looking quite good, the Swissy pair is looking a little bit more bullish. Some of the CAD pairs are possibly also setting up to head a little bit higher. All right, so let's move on to gold. So gold is showing some bearish divergence. It's battling with this. It's not a double top, but it is showing some weakness. The first thing I'm going to do here is not say that we're going to get a change in trend yet. I'm not going to say that yet. The first thing I would say is that this week I think there's a fair possibility that we could find ourselves range bound. Okay, so I'm not saying that's a definite. I'm saying let's start with range bound, and then if it starts to break these lows, then we'll look at a bigger correction to the downside. So let's start with this week. My expectation for now is that prices will head down towards the lows here again to test it for support if we're going to be range bound. That actually makes sense. That leans towards a little bit of dollar strength. If we don't, and there's not an infinite number of things it can do. If it produces a higher low here and starts to head back up this week, then what we're actually getting is a lead up to a triangular or ascending triangle, which is a bullish breakout pattern. And we're going to see this in some of the other charts as well. But generally speaking, in situations like this, because of that bearish divergence, my expectation is the most likely scenario here is that we're going to see price head down to test support initially. If we break beyond that, we'll deal with that when that happens, which might be next week. But those are certainly the most likely scenarios, is a move down to the lows or beyond. Let's have a look at silver. So silver, you can see here, is struggling with its levels, and it's a double top over there. It's coming down towards the lows here. So if we do break these lows, I expect price to head back down towards the $28 mark. All right, let's have a look. I'm going to move on to natural gas. Let's see how natural gas is doing. So natural gas just has very, very big wild swings. You can see here on the weekly, that reaction of that 50-period moving average, very strong bearish reaction, but we've got that bullish divergence, and so I still anticipate, it's just happening very slowly, but I still anticipate that this is slowly going to work its way to the upside. All right, let's have a look at West Texas crude oil. So range bound the last 4 weeks, looking very bearish, not strong at all. Just very much range bound, and at the moment, my expectation is for this is to continue to head a little bit lower, but it's definitely not strong. And overall, I think this is a really good thing. So if you're an investor in oil, it's not great. If you're a trader, it's useless really, unless you're going to trade it, but it's very volatile. But if you're a normal human being whose life is impacted by the cost of fuel, this is obviously very good news. We don't really want anything. During such uncertain times, one of the things that would be nice to not have to worry about is also rising prices of gas and fuel. Anyway. Like crude as well, just to compare that, they're actually essentially the same. You can see here they're highly correlated. And so for now, my expectation is this range bound. If it breaks out of the range, there's a fair possibility it's going to head lower. Let's move on to the global indices as well. Okay, so of course, while I was away, we had this double top reaction. We had a relatively good reaction on the Friday. We had a nice recovery at the tail end of last week. But on the weekly, this is starting, I would pay attention to this. We have a double top, we have bearish divergence. So usually in situations like this, the implication would be that price would head back down towards these lows, and that we could get. So when you get bearish divergence, the market can do one of two things. The story is that the market is tired and it's exhausted and it needs to take a break. So it has two choices. It can consolidate until it recovers that energy, so it can go sideways, or it can have a change in trend. And that's why I'm including the more likely scenario here. First of all, plan A, then my expectation is that price could find itself ranging for a while. And that makes sense within the context of the upcoming US elections, which are now not that far away. It's effectively the second week of, it's the 5th of November, I think, or the 8th of November. I need to confirm that. Let me do that quickly. Okay, so that's going to be the 5th. And so with a lot of uncertainty around political instability, predominantly driven by the right side of the conservative side of things, and obviously their history of attempting to undermine the last few elections, it's reasonable to assume they're going to do it again. So that's going to produce a lot of uncertainty. However, the statistics and the probabilities lie in the incumbent, which is the Biden administration, continuing on through. But the point is that how the markets might react to that is essentially going into a range type of behavior ahead of that. We're going to see how that goes. I'm just curious to see. So that's a hypothesis. I'm just laying that out. I want to see how the markets respond. So we could see for now the markets start to range. The reason I say that is also because the markets are relatively healthy. For it to produce a double top in a nice bull market, to me, I think the most likely scenario, first, or plan A, as I said, is going to be a range-like behavior as opposed to a complete change in trend. There's nothing right now that I could see that should change it. The economy is robust and doing fine. So range-bound is what my expectation is, which means that we could see the market ping-pong around, and that's going to make it more volatile for traders and interesting for investors. If we have a look at the S&P in comparison, also some bearish divergence, a little bit of exhaustion over here. And this is also another reason why, but look at that beautiful bullish engulfing candle there. So the market is going to continue to attempt to push higher. We've had some really good corrections recently. So I trust that the market is going to be able to push through this, but I want to talk about that. But it's definitely introducing some more, I would be more cautious if I was more cautious than normal if I was a traditional sort of swing trader on the markets now. So again, we've got price heading up towards the resistance level here. The monthly looks good. I'm not really too concerned about that. We are just sitting at historic highs, and potentially price is just bumping its head up against that. And it could tick along for a while. And then ultimately, you know, one scenario here, and we've seen this in the past, is during an election year, we see the market sort of range bound, ping pong around, and then once the elections happened, then the market kind of takes off. So let me just have a look. That's the NASDAQ as well. We looked at that. Yeah, all of those look fine to me, but I am cautious of them, and I expect a bit more sort of range-like behavior. Then we have a look, for example, at the mini Russell, the Russell 2000. And here, this is, you know, this could be arguably a setup for a head and shoulders pattern, but more likely it's just range bound and ping-ponging around. And this week we'll see what happens with that. We've got a really nice, beautiful retracement on the FTSE 100, which looks very healthy to me. This is where it gets really interesting because, of course, now we have got the new month, and that shows a bit of a wick on that side. But it's set up in a really good sweet spot this week. If we have a nice bullish finish to this week, the FTSE then is much more likely to continue. And overall, it's been performing incredibly well. Therefore, probabilities lie that it's going to finish strong. So let's see what, if anything unusual, happens this week. The same here with the DAX. Again, you know, for it to have a retracement, a pullback, a consolidation, a breakout, and then immediately start retracing again, that's unusual. It's not common that it would do that, but I'm not going to jump straight to, oh no, the world markets are going to crash. I'm not going to do that. And there's, Lord knows there is enough media that is doing that, and that is panic and hysteria, and nobody ever benefits from it. So if Warren Buffett isn't concerned, then I am not concerned. But I would understandably, if you know the market decides to range and come down a bit and ping pong around a bit, then that's what that would be my first expectation. So you can see here we've got a slightly lower high on the ASX. And so again, this week I want to see if we continue back down towards these lows and find some support. To me, again, as I said, range bound is my first expectation. We've got same here on Nikkei. Nikkei's had a beautiful, really, really good run over 2023 and 24, most of 24, and it's just range bound at the moment, consolidating. I would have liked, and I've said in my previous shows that I would have preferred for this to come back down to test and to touch, connect with the moving averages. It hasn't done that, so potentially as an alternative to retracing, it's simply consolidating. Okay, all of that kind of makes sense. Let's go and have a look at equities of interest. So Apple, nice and strong. It's going back up to the top of the range. So for now, it's range bound. Let's see what happens when it gets to the top, if there's a reaction and it stays within the range or breaks out. But that is what it appears to be doing for now. It's staying the course. Then we have Amazon. So Amazon has obviously double topped over there on the weekly. Some bearish divergence. Again, for now, my expectation is the possibility, fair possibility, that we might see a bit of a deeper correction. If it does decide to come back down towards 164, 160, it's still very acceptable to me after such a good run for this year as well. So we'll see. Otherwise, if that is going to be the case, I would expect it to find some possible support around the 166 area. We go and have a look at AT&T. Look at that. That's breaking out and moving up a lot higher. Bullish engulfing continuation candle, not that overextended. So for now, expect that to just to continue to tick up to the upside. That looks fine. ARC Innovation. You know, I don't want to be critical, but I do. I just don't understand the thinking behind a lot of ARC's decision-making processes and their acquisitions. I feel like they panic and they make a lot of decisions based on fear and greed, like the way that an amateur would do it. So for now, range bound, I don't expect much of it. I expect it to stay stuck in there. I don't expect much from them. ASML looking good. It's had a relatively decent pullback. It is going to battle with that 1,000 level. You can see it already, kind of the wicks producing. It is going to do that. Obviously, over time, I expect it to break through that level. So we'll see what it does this week. It's not going anywhere. Glencore, let's have a look. Managing to break out. I mean, it's a week. It's a pullback, continuation pullback. Let's see what happens if we get a nice bullish candle this coming week. Tesco starting here for a potential weekly retracement. Otherwise, looking really nice and healthy. Don't have any concerns about that. Amex also slowing down. It's starting to lose momentum here. I think I would have mentioned that a couple of weeks ago in the last episode. So we might get a bit of a correction to the downside here. But overall, it looks okay. Any kind of a correction here for me, I would see that as a buying opportunity. That monthly, look how the wicks have started to increase on the monthly candles. So in other words, it's starting to fail, starting to stumble, starting to show exhaustion. That's where I would look to see it have a correction down to 220, would be very healthy. 200 would still be very healthy. Berkshire Hathaway. Okay, so Berkshire Hathaway, remember, in a way, you could treat Berkshire Hathaway as a windsock, if you will. It's a good market indicator. That looks really nice. That's a beautiful bullish setup over here. It is battling with the danger zone, but I expect it to stay in this area. No real signs of weakness there. Coca-Cola, also you can see, there's such a strong correlation between the price action in Coca-Cola and Berkshire Hathaway. You can often see that if Coca-Cola has a really bad week, you can see that Berkshire Hathaway takes a hit. So we know this as a constituent. And right now it looks really good. So Coca-Cola is at the top of its range, but it looks fine, looks good. BP, again, it makes sense to me that both BP and Exxon are highly correlated with crude oil's prices, and therefore I wouldn't expect them to deviate from it much, but here this is looking BP is looking a little bit bullish. Exxon is looking bullish. So even though they are highly correlated right now, they appear to be drifting higher, actually almost arguably outperforming crude oil in comparison. I'm oversimplifying it, but that is what it looks as though it's doing. General Motors, nice little consolidation, really sweet spot here. There is definitely a level of resistance, so I'm going to put that in. It's battling with a particular area over here, but looks good. Looks like it's going to push on and see if it can break through that area. Okay, yeah, that looks fine. JP Morgan Chase also looks really good, so I expect that to continue. A little bit overextended on the monthly, but that weekly it looks good. So we've had a really good run the last month or two. Any kind of pullbacks here for me would just be buying opportunities. Invesco QQQ also looks good. Really nice break and a retest. So this week, I want to see if we can move on. That's a really nice strong level of resistance. It's had a nice pullback. It's broken through that. This is a sweet spot. This should produce support, should produce a bullish finish for it this week. Adidas also looking good, but no doubt there is some resistance in this area. Check it out. Yo, check it out. And it's pushing up through that, so that also looks good. Okay, so Adidas looking good. I've got a habit of just auto saving every time I draw in lines. Comes from my old industry. Okay, and so here we've got a consolidation on Meta. Remember, Meta over here, to my mind, did not correct further enough. It should have come down 400 or further. It hasn't, and so possibly here it's just taken a rest. It's in the sweet. It has at least done a minimum requirement, but it would have been better for it to do a deeper retracement. Right now, it looks like it's just taking a bit of a breather. There's no danger signs, no red flags there. Morgan Stanley starting to do a bit of a correction. It is battling with not only a massively psychological round number, 100, but also historical highs. Ultimately, it's going to break through that, but right now it might be doing a little bit more pullback this week. I'd be curious to see how it finishes. I'm looking for a nice green candle in this area, which to me would be a signal that it's going to resume and do the next leg up. NVIDIA. NVIDIA looking really not bad, but there's an indecision bearish candle. So again, it's done a nice move up. It's running out of steam. It is running out of steam. To me, that just means more that we could potentially have a bit of a deeper pullback if that's going to be the case. The next candle could even stay here, but I'm expecting to see more wicks for now. That would be what my first expectation would be. Yeah, because it normally would have produced a slightly more bullish candle. It's okay. There's nothing inherently flawed in it. There's no real massive red flags right now. It's just the ebb and flow of buyers and sellers getting in and out. Netflix. Okay, battling in this area a little bit over here. Another sign of exhaustion there. But, you know, overall, I think we could be going into a bit of a consolidation period. So it'll be interesting to me if the next few months or the next few weeks are going to be just a series of just candles going sideways across the board. We'll see. PayPal, man. Okay, a bit of a bullish candle here, but overall, this is range bound. So why do I say that? You can see over here, it's been ping-ponging between these areas. It attempted to break out, failed, and then dropped here and is pushed back in. So it's range bound behavior. Nothing magical there. Spotify is battling with resistance in this area. Well, I won't. I'll just draw this in. But there we go. So it's battling with that 311 price area. We'll see. If we get a nice bullish candle here, it could be leading to a breakout. Spider consolidation area. So again, very similar. From a monthly perspective, it looks as though it broke out, pullback, it's produced a bit of a bullish candle. So the implication is that it is ultimately going to break higher. So again, also looks fine there. FedEx. Again, I'm looking for green candles in this area. So technically, arguably, I'd say we're still in that area. I wanted to see if that was going to be the case. We're still there. I'm going to leave it. What I want to see this week is a continuation higher. So I'll draw one in, but I'd like to see a continuation higher this coming week. And so we'll have a look next week and see what happened. That one didn't go anywhere. Tesla. Not much. Again, I'll just recap. We're stuck between this low and kind of this high over here as well. No clear direction. So if you're wanting me to say that it's bullish or bearish, actually right now it's stuck in a downtrend, but more specifically, it hasn't gone anywhere. So it hasn't changed its downtrend. It hasn't turned bullish. It's effectively just treading water, I guess, within an existing downtrend. So in order for me to significantly feel that it has changed, I would have to see something like that. I'd have to see something significant, and we'd have to start breaking higher. We're not there. We're not there yet. So for now, I expect this to stay or go lower. We'll see if that's going to happen. Vanguard, I can't ignore the fact that we have a slightly higher high. This is something on a lot of charts and bearish divergence. Often in situations like this, it leads to a move down and either a consolidation or a change in trend. Statistically, it's more likely to be a consolidation. So let's see what happens this week if we do manage to continue on or if we come back down. But this is not a sign of a normal healthy pullback. It's usually a sign of the market wanting to go into consolidation for a bit. And we've seen this on a lot of the charts. So this is where I would be starting to slow down, starting to be a little bit more cautious, but it's just a wait and see. It's not, as I said, it's not panic in hysteria. Okay, so Walt Disney, I was looking for it to kind of find a bit of support in this area, so we'll see if that's going to be the case. I marked this area, it's a bit outside of that. let's see what happens. So this week, again, I'm looking to see if we do get a bullish candle above that. If we get that support, if we get a little bit of support that holds in this area, let's see if that ultimately comes. If that's going to be the case, that would be a good sign. So there's a couple of charts here that hint that we're possibly going into a bit of consolidation. So if we do get another down week in quite a few of the charts, that's actually normal if they stay within the range. But there's also a few other charts that are saying, well, you might actually get an up week. So next week, I'm sure will be worthwhile running through the charts and discussing. Bonds, US T-notes. This one is interesting to me again because I've been mapping this out to see if we get that. I call it a double bottom, but basically we'll see if we get a turnaround here. And that could be very interesting. So I'm always looking at these because we really haven't seen bonds move to the upside aggressively in years. And yes, I would see that as significant if we started to see buying of bonds, but a real change, which would take months. It would take months to see that change, but that would support the idea of market fragility. So if we started to see a real move in bonds and see a bit of a correction in the equity markets, then I would be like, okay, now I will consider the fact that maybe this is now a bear market or a market crash or something. But I'd really have to see all of those signs. So looking to see if that's going to be the case. EURUSD still hovering in the bottom low end of this range, and actually of the 10-year versus that, I was expecting this one to turn around a lot more, expecting to push and break through. And it's still dropping and dropping and dropping. Yeah. So you can see that selling pressure on it. They're not getting much love. So according to this, and if you take this, according to this, people are quite happy to put more risk into stocks than they are into bonds. And then if you look at the VIX, you look at all the different things, all of them are saying, look, the market, whether it's done by greed or not, whether it's through confidence, the market is relatively happy with stocks, its exposure in the stock market. Cryptos. So cryptos to me, I feel are looking, and my words are, I'm conscious of that I said feel, because feel is a descriptor, but this behavior is very similar to a couple of stocks that we looked at where they didn't have a big enough correction. And so they look as they're just going to consolidate. But I think in the longer run, we're going to see a breakout to the upside. Ethereum, again, is back up at the highs over here. It looks fine. They don't look unhealthy to me. There's no massive red flags. Solana, just a bit of a bearish candle there. But again, within the monthly, it looks okay. It looks okay. It's just going to bob around for a bit. Cardano, not looking as strong as the rest. And this one looking weaker in comparison to the others. And then the last one here, which is Binance, just a consolidation, which I was looking to see if that was ultimately going to lead to a breakout. I stand by that for now. I stand by it for now. I'm just going to extend that a little bit. But for now, it's clearly consolidating ahead of it. So to sum up, a lot of charts that look like this, they don't really want to give up all the gains they've made. Does that mean they won't? Maybe they might capitulate and suddenly sort of relax and then just have that correction. That could happen, but a lot of them seem very reluctant to do that. They'd rather like just consolidate where they are for a few weeks or a month or two or whatever, and then start to move. But overall, as I said, overall, most of the economies aren't looking that bad. Even some of the inflation is coming back under control. The UK really needs to get its act together on that front, and that obviously they need to find a way to overcome the corporate stuff. But I can see in the marketing now, I can see a lot of the superstores starting to talk about, dropping prices to meet customers whose budgets aren't as big anymore. And that's because obviously they're realizing the numbers are starting to take a hit. So I would expect some of the corporations to start reporting kind of fewer or lower profits in the coming months, but that's to be expected because they've been rinsing everyone for a while. Other than that, everything looks okay, guys. So let's see how the coming week is. Trade sensibly, manage your risk appropriately, please, and let's not do anything silly. And keep an eye out. There's lots of good potential stuff out there as well, especially in some of the currency markets, some of those crosses as well. And be patient. All right, thank you.